All right, so welcome to another video. Today we're going to take a look at Spotify. Just released earnings. It's not doing so well, and we're going to go ahead and check that out. And if you want to join me on Discord, you can also request other stocks and tickers for me to kind of review. All right, before we get started, keep in mind it's not a recommendation. It's just my own personal opinion. So right now, as we continue looking at things, the stock is down about 14% or $28. And after these earnings reported, there's a lot of politics that goes in with the royalties within Spotify. There's also just a lot of legal compliances that they have to deal with. So it's a very difficult business. And if you recall Pandora, how it tried to make things happen, it's a tough industry. In other words, Spotify is doing probably the best out of any of those companies to making it work. And but if we look at the stock and you kind of just pull it up, it plunges after, but they'll put a blame somewhere. Right now they're talking about blaming Joe Rogan. They're down 20% on weak subscriber numbers, blah, blah, blah. So there's always like different things on what the news will pinpoint on it. The fact is, it's just a tough industry. When you look at this stock, it was at around 200, did a nice breakout. Now it's doing a pullback kind of back to near that 200. So we're going to analyze the charts real quick for you. And I'll give you kind of a short-term, long-term perspective, because remember, if you're doing things on a long-term perspective, you're probably still going to be in Spotify, right? If I'm looking at it from a 5-year, 10-year period, if I'm looking into Walmart, I'll probably be holding Walmart. But if I'm looking at it from a short-term perspective, you probably shouldn't have been in earnings, or now you're kind of wondering, should I buy the dip kind of thing for the next couple months until the next earnings? So that's what we're going to take a look at here, and I'll give you some insight. Okay, so if we back this thing up to kind of a monthly chart, you can see the stock fairly new, fairly recent. So 2017, 2018. So 2018 came out. We did not much for about a full year, and then that stock broke out. So took a little bit of time in this compression, and then the stock did really well. People started to come in. We topped out kind of around that $300 price points, kind of like the main level. Even though we went a little above that, this is kind of confluence, like, euphoric buyers. Confluence. And then we topped out, we got some issues there, and again we went kind of sideways, so we were in this range again. So the next step you would think would go higher, but we're getting this pullback. So where can the stock go? We're coming right back to this support where we were earlier in 2019, 2020. So I think that's a good, logical, healthy spot. And if you're looking to kind of nibble a little bit, this could be like a nibbling opportunity if you're looking for a longer term investing. That's kind of what you would look at. But normally these types of companies, they're very difficult to make profitable, and I have to give them credit for they've done a fantastic job for, from the stock price perspective, from just overall making it happen for the user base, because I think that's great. So right now the stock is down about 14% for today. And we're coming into support. The support's around 150. Yes, there's some more critical spots, exactly price pinpoint, but remember, support is kind of a range. It's not exactly a specific price spot. It's kind of that range of prices. But we've had a lot of selling pressure. Like if you look at all these bars, there's been a lot of bearish volume that's been coming in recently in this stock since this down move, and that's where the stocks have been having a lot of trouble. I think right now you're probably getting into some possible good value opportunity, but if you still keep selling further, you're going to look back into about that $100 price level, maybe about 120, 115 is where we're at. Where is it? 110. 110 is kind of the other price level that you're looking at. But kind of that $100 is a psychological level. So look at these kind of levels. If we can't get a bounce here, watch for a possible bounce there. And that's where you're kind of reevaluating for taking a little bit more of taking the longer term approach for a possible, hey, the stock could actually be good. At the moment, I'd say, hey, for the short term, the stock is kind of toast. It's also been selling off, if you just look at the full sell off, we've actually had about a 60% pullback from the highs. So those highs were 384, and now we're at 162. I'd hate to own it at, those higher prices. You're down about 60%, and that's not good. But if you're long-term invested in the company, then looking at something around that 150 level right now, you could start looking at, hey, buy the dip. But then in that case, you're probably looking to hold for 3 years plus, 2-year plus, because it just, even this time frame move was a full year. So even if it goes sideways for a year, then up for another year. So that's already a 2-year time frame. So, and that's if you're fortunate to start the sideways right away. So, 3-year plus is kind of what you might be looking at for that longer term horizon. So anyway, hope that helps. For the time being, give it 3 to 5 days to digest the earnings and then see what happens here. If we can hold that 160, 150 level, that's great. If not, watch out for that other level that I mentioned for you before. Thanks for joining me. Feel free to check out my other channel at Traders Fly, where we talk a little bit more about option trading and trading those derivatives. But other than that, I'll see you in the next video.